Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday. It's July 27th. This will be our chart lesson for today. An interesting day. It was FOMC day, so we lost a little bit of the trading today. It was really, we had two legs up. I'll show you on the intraday chart, but you can see it was a nice bullish day on the daily chart. And notice where we traded to and where we closed. There's your measured move on the two legs up. Just as we suspected, we did pull back and bounce and then push on up towards a measured move. We could go higher, but my expectation now is we'll probably turn down from here, and I would expect we're going to trend lower. Um, we could go sideways for a bit before we sell off. We could even rally some more. But the chart's saying that we've fulfilled everything back to the upside. Notice the short-term channel up. We get the close outside, plus the pullback to test the breakout area. Then we rallied higher to make a measured move. And the fact that we closed off of that and below that level, I mean, that's showing that resistance level is obviously valid. So again, we could still trade higher from here. We never really did test this area, breakout area here. Notice how we just dropped straight off. We could run on up to there before prices turn lower. But my gut feel, just based on my experience of reading this chart, we're going to turn down here and attempt to make a new low soon. And so people are getting excited here. They're thinking the market's found a bottom, lots of rallying going on, and we know what happens. We've seen it before. We had a nice rally here that only led to a huge sell-off. Another one here, huge sell-off. Um, doesn't mean we doesn't sometimes price action doesn't follow the rules, but 90% of the time it does. So again, my expectation is that we're going to have another sell-off here. We'll have to see. But there it is on the daily chart. Pretty much what we were expecting. We talked about yesterday or the last couple of days that may be going to happen. We may pull back, test this, and go back and make a measured move. And anyway, let's flip over to the intraday chart, 2000 tick chart, and go through the trades. There's not a lot of them today, even though it was a big rally day. We lost a big portion of the trading day because of the FOMC announcement, and then there just weren't a lot of good setups either. So for such a strong rally day, it wasn't the best trading day. I mean, there's some good trades there. Don't get me wrong. There's a few decent trades, but not what you would expect on a rally like that looking at the daily chart. But let's flip over there and we'll go through the trades and wrap the day. Okay, here's the bigger picture version of it. There was one leg up, sideways action, and a second leg up. And you can see we met that measured move and looked like we were going to sell off, and then we ended up going higher before we came back down before the day was over. So pretty much the rally just continued. People were excited and buying. Again, they raised the rates again. It wasn't this area in the blue block is the FOMC announcement. Don't trade about an hour. Get flat. I mean, if you're already in a trade, you can still continue to manage it, but don't enter any new trades after noon, and give it 20 to 30 minutes. Generally 30 minutes is good, or until it settles back down to normal. It really wasn't that crazy of a day. I mean, there's still a big move there, but this is not a crazy day for an FOMC announcement. So, hey, but I marked off about 30 minutes there. We'll see what really wasn't much setting up there anyway. So, but let's zoom in here and go through the trades. But 7 o'clock came just as we're kind of bouncing around in here in this little sideways stuff, and we actually get a nice triple test here with a nice bar, but you can't go long right into that resistance there. But when it breaks higher and pulls back and gives you a second entry long, and you can see where it tested that and closed above it, I like going long there. It's not ideal. We did trade down into this, and so there's a good chance it could it could run up and test one of these highs and then turn back down. But I think there's enough room there either way. So I tend to like that trade um, because we did pull back and test it here a couple of times, and notice how we closed outside. If we break higher, you'll probably trap some shorts that tried to get short in there. And it just runs up another level and just does the same thing again. You do get a failed breakout here, but most of the time you want to wait on a high or low or something, and you actually get a double bottom right here. So I like going long right there. And that kind of sets that trend line as well. And then notice how it runs up and you get a first entry, second entry, and that's a quick failure. So when it breaks above there, it's a failure. I like going long there too. We've been trading up, and it looks like we have a trend line in play here. And I draw this shorter term trend line too, and you can see there's clearly a channel here that's in play. Notice that you have another new swing low there. It's lower than that one, so you get another first entry, second entry that fails right at the key entry point. There's even I didn't mark this, but I probably should at least mark it green. There's a hidden second entry here. Notice how we pull back, go higher, and turn back down. If you went to a slightly smaller chart, you'd see a break higher there most likely. And so it's like what we call a hidden second entry. It's a little more advanced. If you're new here and that confuses you, don't worry too much about it. You're better off just to forget about that for now. You're not at the point you want to try to trade that. It's a much more advanced setup. Stick to the basics until that makes perfect sense. Then you could maybe try to trade it then. But for now, just skip it. And of course, we just go sideways here again. This whole correction is just sideways. I did not mark this trade right here, but it's another one that you could argue for green. But let's go through this because there's a couple of setups here that are really tempting. That one's really tempting, but there's not much room. Of course, when you're going sideways like this, you don't worry too much about the EMA, but you can see all the stems and stuff, and it's congestion. And in that case, it could hit the high and turn back down. I don't think there's enough room to get out there between here and the. See, there's only 4 ticks right there. So that one concerns me, and it does make a new low too. So you need to wait on a higher low, and then you see how many times you've gotten stuck right there. It's not worth risking it. Yeah, it works in the end. Now this one, when it breaks out, this one's really tempting, but it's just a first entry. It does make a new low on the breakout, and notice what this. Maybe I need to explain this. This dash line is just an equal distance for the pink. And so all we did was move down an equal distance. And we moved up an equal distance here, but we got a failed breakout of that. So in the end, really, it's just a bigger range. In the end, all that happens is the range grows to look like this. So if that makes it a little easier for some people to see it, then there it is. But all that, you could have found all that just based off the original range of this. And now forget about these lines here. You wouldn't need them once you drew it that way. So, but you do get this failed breakout down here. It makes a new low. It does bounce off the key entry point though, and that makes that hard to ignore. I did not mark it, but it's another one where there's probably a little hidden second entry, and if you really wanted to take it, you could. There's a higher low here, and I didn't mark it either. I think you need to wait on a reversal pattern here, and you don't get one. It just runs straight on up. I mean, again, that's one you could argue. Maybe it's green because it does bounce off the support. I'd like to see it bounce again or either get a reversal, some kind of trap. Because you can see right along there we've been turning down multiple times, and that's right along that. Let me just draw the line so it makes it easier. I can see this, but sometimes people don't see it their eyes aren't as trained to this stuff. So you're going long, right? And we just turned down there again. So you got to be concerned about that. So I'd want to see it come back here and give me another test on a failure reversal type pattern, that kind of thing. And it ends up running all the way up, and we're testing stuff here, but you never really get a setup. Then we come back down, and we do get a close outside. And this one was tempting. It's very similar to this. It's almost a repeat pattern. However, um, if we don't break, when we didn't break higher on this next bar, don't take this trade because that's not a good sign. It should have broke higher there. And what'll happen, a lot of times it'll break up higher one tick and it'll make that second leg down. Notice there's only one leg down right here. So you got to be careful with that. So yes, the fact that it didn't break higher right here, I'd skip that trade. And then there's not enough. There is a failure here right off the trend line too. There's just not much room here and a lot of congestion. It's just not a very high probability trade. Um, I mean, you might argue for that one to be green if you have enough room to get out before here, which I don't. I just don't know if you do or not. It's going to be close. Yeah, see, there's only 4 ticks there. So I wouldn't even mark that green. Without enough room, there's no justification for taking that. And you can see it fails temporarily before it goes higher. And unfortunately, you don't get another setup here off the highs of the range, or you might could have taken it. So um, then you got the channel moving down. You get a break, a move to a new low, and it's only a first entry, kind of congested looking. I'd wait on a little higher low or a failure or something. Your higher lows here, not a very good setup. Then your failures here, and all you have is congestion. But finally, you get a triple test and a nice signal bar. That's where you'd go long. And we run up just a little, then we're going sideways again. Or we make a new high, and then we finally sell off. So notice you get your break. You actually get your break here, and you get 2 legs up, and you don't quite make that second leg. And so that tells you if we turn down here, that's going to be a pretty strong move down. And that takes you into noon anyway, so you can't take any more trades. I don't see anything here I like anyway. And so about about 1:30, you can pick back up on the trades. There is a second entry long right here, a little ways away from the EMA, and there's some support there, but I don't think there's enough to justify going long right there, especially when this bar is an inside bar, so you can't really use this for your signal bar. The higher low is no good, but finally you get a reversal. So if it breaks above here, it's a failure reversal, and that's where you might look to get long, and off it goes. And then you get another triple test here. It looks very similar to this one over here. Triple test right there. Nice long. There's a hidden second entry in there. There's a higher low here, but it's not a very good signal bar. And then there's a reversal here, but it doesn't set up properly, and off it goes. And from here on, you just don't get many setups. It's really strong. Comes back to the trend line here, but that signal bar is no good. Just a first entry. This is a double top, so that's just a first entry. And then you get a couple of legs down, and you can see that was an inside bar. And if you take that, you get trapped and stopped out only to watch it go where you think it's going to go. And that's the reason we don't like inside bars. They're not very reliable. But you can clearly see the channel here. And you get a little close outside right there. Move to a new low, and then we're headed up. But no setup. And then you come up here. So now you got a break of the blue and a new high in place, and you try to go higher a couple of times, and you actually get a second entry short right there. That's your signal bar. Notice that low. First entry, second entry. Technically, by the count, this doesn't make a new low, but it's still, we tried to go higher 3 times there, so I still like that as a triple test, and it really looks like 2 legs up. And so not this signal. I wouldn't go long way or short way down here. This actually breaks higher first. Actually, it breaks lower and goes back up. So you'd have to trade that as an engulfing bar, meaning your stop has to go up here until this bar closes, then you'd put it 1 tick above that. That's why I marked that green. It's a little more advanced. Most of you probably better off skipping that trade. And then of course we drop down. We get a close outside, and we try to go short several times, and it fails. No setup here to go long though. It's too congested below the EMA. Comes back to the trend line here, but it's just a first entry on an engulfing bar, and no reason to take that. Another first entry. And we're just chopping sideways again. And notice that you get the break right here, and you make a couple legs up to a new high. So, and you do get a failed breakout. So maybe you go short right there, just ride that back to the EMA, and maybe here, and it may just reverse. It's an easy scout, what you figure it would be. And unfortunately, or I shouldn't say unfortunately, but you don't get a big runner out of this, and it finds support here and bounces two more times, and then next thing you know, we're rallying higher again. So we do come back and test this, but notice you just don't have much room to the highs there. And it drops down and fails and turns up, and you don't want to go long at the high right there on that setup. I mean, you could say, hey, that's a failure, but it doesn't set up properly. It doesn't even come back and test this a second time, nor does it come back and test the EMA. And you can see it looks like it's going to fail for a minute, but it does. The momentum's still strong at this point. And they're probably just running stops up here because somewhere right in here was about the measured move on the daily chart. And I'll just flip over there and show you that real quick. Just so there's no confusion. Somewhere right in there, I mean, right, that's right in here somewhere, around 40, 20, 50. So you can see there's 40, 20 is right in here. So that's right in that measured move area. Basically, pretty much where this line is almost here for the measured move today on this chart. And so what happened, there's probably a lot of stops up here, and they just ran the stops, and once they ran out of stops, notice how it turns and sells off the rest of the day. And I just don't see any other trades you can really get in before 2:30. So the afternoon's kind of weak. A few trades in the morning. So for such a big rally day, there's not a lot of opportunity there. So better than one of those crazy sideways days where there's no consistency, but it's just the way it goes sometimes. So usually your best trading's in the morning, and that proved out today, especially on an FOMC day. Usually I don't even look at prices afternoon on FOMC day. I don't try to trade this stuff in the afternoon or anything. I rarely trade that anyway, but I certainly wouldn't even look at it on the FOMC day. Even if I needed another trade, I'd probably just close up for the day at noon and be done with it. So, doesn't mean you can't get some good trades. Don't take me wrong, but most of your best trading is always in the mornings. That's my experience, and just based on years of doing this, every now and then it'll flip-flop and you'll have a good afternoon and a weak morning, but it's rare. Most of your trading is all going to be in the morning, your good trades. Now, it doesn't mean you can't, if you can only trade in the afternoons, it doesn't mean you can't find a good trade in the afternoons. It just means you're probably not going to get as many opportunities and good setups as you would in the morning. And I don't know why that's that way, but it's just been my experience after doing this for so long. But anyway, another FOMC day. They raised our rates again. So rates continue to go up. And generally that has not been good for the market. So this rally today was probably to run that measured move. And I'll be shocked if we don't sell off from here. I really will. Doesn't mean we will. Mac's not always right. I mean, I just know what the chart's saying. The chart's saying we should be expecting a sell-off soon. And so we'll just see. We'll see if the chart's right this time or not. I'm pretty confident in my read, but that doesn't mean that the chart doesn't always do what the read tells us. So we'll just have to see. But the chart's saying we're going to go lower again here before long. That can always change. Nothing's written in stone. But usually price action rules hold true about 90% of the time, and that's all we need for a huge edge. And that's why we trade following those rules. But anyway, I'm going to wrap it up. We'll be back again tomorrow. We'll wrap up our week tomorrow. Maybe we'll get a good trading. Maybe we'll get a big down day and lots of easy second entries off the trend line for the new guys, and we'll see what happens. We'll see what tomorrow brings. But I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.